Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
The highlights this week will undoubtedly be the eagerly anticipated NFP report, set to be released on Friday. Economists are expecting a solid addition of 180,000 jobs in May, following April's impressive growth of 253,000, with a substantial increase in wages. This report will be crucial ahead of the Federal Reserve's June meeting, where they will determine the future of their rate hike campaign. The Fed's stance on inflation has been a topic of debate, with some policymakers suggesting that it may not be cooling down fast enough. These concerns were reinforced by Friday's data, revealing a substantial jump of 4.7% in underlying core inflation for April, surpassing the Fed's 2% target. As a result, the market is now pricing in a 64% chance of a 25 basis point rate hike during the Fed's meeting on June 14th. Across the pond, the Eurozone will release its flash consumer price inflation data for May on Thursday. These numbers are expected to highlight the ongoing challenges faced by the European Central Bank in its battle to curb price pressure. With headline inflation currently running at 7%, and the underlying annual inflation at 5.4%, both above the ECB's 2% target, the road ahead remains challenging for the central bank. But that's not all. Stick around till the end of our program, as we'll be sharing our expected technical analysis for foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar is poised for a third consecutive weekly gain. Investor confidence in higher for longer interest rates, coupled with crucial talks on the debt ceiling, has propelled the dollar's rise. Encouraging progress in negotiations between President Joe Biden and top congressional Republican Kevin McCarthy has eased some investors' concerns. However, the deal still faces challenges as it navigates through a narrowly divided Congress before the government runs out of money by June 5th. Shifting our focus to Wall Street, US stocks closed significantly higher on Friday, adding to the positive sentiment ahead of the long Memorial Day weekend. Hopes for a debt ceiling agreement and strong gains in chip stocks, driven by optimism surrounding artificial intelligence, fueled the market's upward trajectory. Analysts suggest that a resolution on the debt ceiling could boost the Fed's confidence in raising rates again. However, the prolonged standoff on this issue has unsettled financial markets, impacting equities and pushing the US to pay record high interest rates during bond sales. Although a deal is anticipated, a substantial rally in stock markets may be uncertain until the passage through Congress is confirmed. Let's not forget about commodities. The long-awaited deal to raise the US debt ceiling has the potential to unleash a new wave of risk-taking in the equity and commodities market. After weeks of fear surrounding the possible government default, this development brings a sense of relief. In the oil markets, the OPEC voluntary production cuts have been overshadowed by challenges in overall market sentiment, including refinery margins and discouraging Chinese manufacturing data. Finally, let's talk about gold. While gold bulls are keeping their hopes up for another record high, the recent trend has been a downward one. Unless we see signs of a rebound, such as a strong weekly close above the 38.2% Fibonacci level of 1,975, a further drop to the 61.8 Fibonacci level at 1,910 could not be ruled out. Now it's time for our much-awaited technical analysis. We'll start off with Euro-AUD. Next, we'll dive into the Dow Jones analysis. We'll also cover the analysis for crude oil, and lastly, we'll look at the analysis for gold today. So let's kick things off with Euro-AUD. This currency pair currently trading within that primary resistance level. A break above and a close at 1.649 could potentially trigger upside on this pair, all the way back up to that previous resistance. A close below 1.642 could alternatively trigger a decline back down to that previous support. Now let's shift our focus to the Dow Jones analysis. US 30 is currently trading below that primary resistance level. Now that an agreement has been reached on the debt ceiling limit, the potential break of the resistance and a close above 33,450 could trigger a rally, potentially even all the way back up to 34,200. Now let's look at the analysis on crude oil for today. WTI rallied from that diagonal support on Friday and is now trading just below that primary resistance. A break above the resistance with a close above 74.5 could trigger a rally all the way back up to 77. And lastly, let's look at the analysis for gold. The yellow metal is currently trading within a pennant formation. A break above the pennant with a close at 1948.5 could trigger a rally all the way back up to 1960.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the best be with you. Cheers.